Welcome to Learning Plan 1. To begin, you'll want to download the Excel spreadsheet that you see in front of you under Learning Plan 1 on Blackboard to follow along. Starting out, we're going to take a look at the basics of accounting, and in this course, we're going to use the transaction data that we see here up on top, which are common transactions, and we're going to record them below in the Excel spreadsheet that you see. And we're going to start out looking at the basic equation in accounting, which is assets equals liabilities plus owner's equity. We'll begin by entering these common business transactions involving common asset accounts, and we'll see how they affect the other side of the equation, being either liabilities or owner's equity. If we have income or expense accounts that are involved, of course, those are netted and brought into the equation through owner's equity. Now is a good time to point out that the spreadsheet has a lot of formulas already built into it to help us along. If you remember from your Excel 1 class, if you double-click on any cell with a formula, it'll show you the fields that are pulled into that formula. So in this case, we're summing the total column of cash, being B15 through B27. If we want to go ahead all the way across, that formula has been pulled all the way across and into our liabilities and equity as well. Over here, we have a formula that is keeping track of our running cash balance. So it's starting off with the very first cell, and the formula below that is pulling the cell above plus the new cell affecting cash. And down here is the best part. This is where we have a built-in error check. So if you double-click on this formula, your total assets is just summing all of your asset accounts. And your total liabilities and equity are summing your liabilities and equity account totals. And this is my favorite cell, which I use in industry very often. I build these little formulas into my spreadsheets whenever I could. And I've got down here, it's showing you the difference between assets and liabilities. And of course, we want our equation to balance. So if this ever is not a 0, that's your indication that you have an error on your spreadsheet. Another thing that I'd like to point out before we get started is any time that we can use a formula in our spreadsheet, I expect you to do so, and I'll show you through any examples that we do. I'll always be using a formula, and the reason why is because we don't really want to type in $9,000 here in cash. You can see it's a formula is pulling it from above. And in accounting, a lot of times we'll make changes on the fly, and if we have our data up top of our spreadsheet, we can simply make the changes up here and have confidence that that data will then update and flow through all the templates below. So let's explore how this spreadsheet calculates the totals and keeps our equation balanced by moving the transactions up here into our template. So the very first one that we're looking at, A, is that we opened a business checking account with an opening deposit of $9,000. So in this spreadsheet, we're going to show that as a positive $9,000 cash. You can see the formula is equals F2. Okay, and that also then flows into our equity section of the balance sheet. And here we have also an equal sign and pulling in cell F2 to start out our cash balance of $9,000. We still have a 0 down here, so we're off to a great start. Transaction said B, we paid rent on an office space and equipment for June. So if we paid, that means that cash is going out the door. So I'm going to type in my formula here with a negative sign. I'm going to grab that 3,000. Looks like it was an expense. If it was rent expense, it would go through equity. So let's go ahead and do a negative and pull in the same cell. See that our difference is still 0, so let's keep moving. C, purchased office supplies on account. Well, the key here is on account, so if we purchase on account, we're not actually spending cash at the moment, but our office supplies is sure increasing. So let's do a formula there and grab our $1,980. Okay, but since we bought them on account, our liability has now increased as well. So we'll drop that in there. Still have a difference of 0, so let's keep moving on. D, we received cash for services rendered. Well, that's always good. We'll take a positive cash flow in here. Cash flow, since it was services rendered, that looks like it would have been revenue flowing through the equity side of our balance sheet. Still got our 0. Moving on to E, paid bill for office supplies purchased on account. Looks like we're referring back to maybe that transaction in C, so we're paying money out. Get our negative sign in there. And at the same time, we're reducing that liability of accounts payable. We still have our 0 sign. Purchased office supplies for cash. Okay, so here we've got cash going out the door. Okay, but our office supplies are increasing. So here's the first one where both of our entries are on the asset side of the equation. And we're still at a 0 check figure. Moving on to G, billed clients for consultations performed on account. So again, this one's not going to be affecting our cash, but we sure can book an accounts receivable, which is going to be moving through our revenues and so also our equity. Still have our 0. Moving on to H, paid monthly internet service bill of $360. Sounds like money out the door. And an expense going through equity. Paid the secretary salary of $2,400. Again, money going out the door. You can see our running cash balance reducing here. And again, paying salaries is an expense going through equity. Next, we return the office supplies purchased in transaction F. We got a full refund for that. So here we're going to get a $300 cash flow in. But we return those office supplies, so we're going to see a reduction in our office supply asset. K, received cash from clients previously billed. Okay, so here I'm going to purposely type this cell in incorrectly so we can just see how it would look if we did have an error. So I'm going to say that that cash went out even though we know that it was cash received in. Okay, that would reduce my accounts receivable if it was previously billed. See, and here you can see we have a difference, and that's because we know that we entered this in wrong. And if I just take away that incorrect negative sign, you can see we're back in balance again. Just to kind of show you how useful this is, it really kind of gives you confidence that what you've entered in is correct. L, cash was withdrawn for owner's personal use. Sounds like cash flow out. Okay, and maybe we reduced his owner's equity. And the last one, supplies used during the month were $600. So we're going to go ahead and reduce our supplies by the $600, which would have in turn also showed expense for supplies of the month running through the equity section. All right, so now we can see, once we have all these common transactions entered, how it affected our overall equation. We can verify that our total assets and our total liabilities are still in balance. And we can also see what happened to our cash during the period. We started with $9,000 and ended with $7,220. This concludes Learning Plan 1. I hope that you found the information useful, and thank you for joining me today.